last 6 months until the end of December 31st, 2022, the Chinese market have seen significant volatility due to events, and there are two significant events that I want to mention here. The first being the end of or the conclusion of the 20th National Congress that resulted in market being pretty unsettled over the perceived lack of checks and balances on the new administration, especially that was on the back of President Xi consolidating his power at the highest level of the government officers. So that was a significant event and which drove the market to the lowest point in 2022. But going into the fourth quarter of last year, we saw another significant event. There was a rapid pivot away from the much criticized zero COVID strategy, and the rapid pivot away caused initial fear amongst the people. That was the beginning of December, and that resulted in some slowdown in economic activity. But then, market has been pricing this positively because with the opening up of the economy, the Chinese economic situation should be much better than what it has been in 2022. So where are we now as we stand today? The first wave of the infection has already happened across the whole country. And because of the first wave of infection, people have become less fearful of the COVID virus. They are now going out and about, as we have seen in the ridership of the subways in many mega cities. And then there was also the fear about some of the lower tier cities, rural areas, not being able to handle the high infection due to the lack of more developed healthcare services in those parts of the country. That fear has been largely undone as well, unfounded as well, because we have not seen a spike up in the death rate. Of course, there has been a lot of criticism about the disclosure of the data, but judging from what we're seeing on the ground, there hasn't been a big increase in the death, even at the lower tier cities and the rural areas. So all in all, when it comes to the COVID situation, the country has basically muddled through so far, and in a very rapid manner. This bodes well for the consumption recovery in 2023. With the zero COVID strategy or restriction being lifted, there will be pent-up demand, and the population has accumulated quite a bit of excess savings during the pandemic, and even without going into the excess saving or tapping into the excess saving, consumption should recover pretty well this year, and we're looking at a high single to a low teens in terms of consumption recovery. So that part of the economic growth, consumption growth driving economic growth, is much clearer. What is less clear is the real estate sector. Measures have been put in place in order to backstop some of the credit or the financing issues on the supply side for the developers. But we have yet to see a strong recovery on the demand side. However, there are green shoots of some demand recovery for the real estate. Secondary homes transaction in China has been improving rapidly, together with the opening up of the economy, or the pivot away from the zero restriction has allowed people to view houses and secondary transaction has gone up. So that is a positive sign. However, we will probably need economic recovery to happen first before we see the demand for real estate to come back. So that's the overall economic situation. We are constructive on Chinese economy this year, and the economic driver this year will be mainly the consumption growth or the consumption recovery due to the pivot away from zero COVID strategy. How are we positioned? We have not made significant changes. We still position our trust towards the long-term structural trend, as well as what we are seeing in terms of government policies. And a lot of the government policies are put in place in view of the long-term risks, which is the US-China competition, or you can call it rivalry. With that US-China competition in mind, the Chinese government is doubling down on becoming more self-sufficient. So we continue to be positioned on the domestic economy because that is the largest consumption market that China can tap into to become more economically self-sufficient instead of relying on exports in the past. And secondly, being self-sufficient on the technology front, namely software as well as semiconductors. These are the areas that the government will continue to invest a lot, and that will provide a lot of opportunities for us to find stocks in those areas. The third theme is on green energy or renewable energy. The country continues to invest substantially in getting the country to move away from fossil fuel reliance. So that ranges from not just the power plant, but also moving to electrification of vehicles. That trend continues to be intact and strong. So that is another theme that we are continuing to be exposed to. The other two areas that we are exposed to, or investment themes that we are exposed to, are healthcare as well as wealth management. And these two investment themes are related to the aging population, as well as a population that is getting wealthier. So the demand for healthcare services as well as wealth management will continue to be very strong. So those are the 5 themes that we are positioned in the trust. Just to summarize, there will be consumption, which is what we call aspiration. Secondly, digital, which is on technology, self-sufficiency. Thirdly, on green, that will be country becoming less fossil fuel reliant and moving away from moving towards a carbon neutral position in the long run. And the third and the fourth and the fifth themes are related to aging, and those are healthcare as well as wealth management. So that's where we are well represented, and we continue to believe that this will put the trust in a good shape, especially in 2023. As I mentioned earlier on, consumption will be the key driver. The abrdn China Investment Trust outperformed in the last 6 months up to the end of December 2022. This was mainly driven by stock selection. The outperformance was to the magnitude of 2.7%, and of which stock selection was 2.4%. And if we drill down further into what helped us on the performance side at the stock level, we have some of the software companies that I mentioned benefiting from the continued emphasis on being more self-reliant, being more self-sufficiency, and national security that was mentioned by President Xi during the Congress a couple of times. That helped to lift the sentiment towards software companies. And then we had the reopening of the economy, pivoting away from the zero COVID strategy. That also helped the software companies, mainly because, without the lockdown, a lot of our software companies are able to implement IT solutions, IT projects, and that will help in terms of the recognition of the revenue in the new year. So that was definitely another key beneficiary of the reopening of the economy. The other stock that also benefited from the reopening of the economy was AIA, the life insurer headquartered in Hong Kong. It has businesses in China that will benefit from the reopening as well, because it makes life insurance selling much easier when there's no lockdown. So the life insurance agent can talk to customers in person rather than over Zoom. And that's definitely a big beneficiary for a company like AIA. Another significant driver of its business is cross-border selling of insurance products to the mainland Chinese in Hong Kong. Now that with the borders opening up, there's no restriction for Chinese customers to come over to Hong Kong to buy life insurance products in Hong Kong. The benefits of the life insurance products in Hong Kong is still better than those on the mainland China, and that's why there is always that demand for mainland Chinese to come over to Hong Kong to purchase life insurance products here in Hong Kong. So that is another key driver of the AIA share price performance following the reopening of the economy. There is another stock within the what we call the green space, and this company is called Sungrow. Sungrow is one of the largest manufacturer of solar energy inverter as well as energy storage. Now there has been a significant change in the raw material prices in the solar energy sector, and this is the polysilicon prices have been coming down recently. With the raw material prices coming down recently, that will spur the demand for solar energy equipment, or the build-out of solar energy utility projects will increase in the new year. So definitely that will be positive for Sungrow, and hence the share price of Sungrow had been pretty strong in the recent times. So that is on the performance of the trust. In terms of the portfolio activity, I want to bring up the significant event for the trust that we have started. We have drawn down the loan facilities. The amount is roughly 2% of the trust, and with the availability of the QFI, which is qualified foreign investment license or quota, we are able to use the loan drawn down to invest in some of the A share companies that are only accessible via the QFI channel. So we have introduced two names as well, and these are Center Testing as well as OPT Machine Vision Company. So these are the two names that we have introduced with the availability of the QFI method of accessing the A share market. Now, a little bit on the Center Testing. It is the largest, what we call the testing service provider in China. Chinese are getting more particular about the safety of lots of things, not just food safety, but also consumer electronics, safety of those products. And when it comes to testing of these equipments or these products, they will outsource it to players like Center Testing, and hence Center Testing is a beneficiary of the higher requirement in China nowadays for a lot of the safety, a lot of the qualifications that Chinese consumer demands nowadays. The other company that I want to mention is OPT Machine. It is the largest what we call machine vision provider. So instead of using the human eye to increase instead of using a human eye, having the machine vision will help high-end manufacturing to help with precision manufacturing. So that is part of what we call the automation trend that we are seeing in China. This company is listed on the stock market, which is what we call the Nasdaq of China. So it is definitely one of those companies that are at the forefront of technology. And with the declining birth rate in China, that would naturally mean less and less people joining the workforce in the long run, and hence there is a great demand for automation. OPT plays into that particular demand for more manufacturing to be automated. So using the machine vision to do that will definitely help to alleviate some of the concerns over the potential declining labor force in the long run. But at the same time, more importantly, it helps with the country's desire to move up the manufacturing curve. Moving up to the high-end manufacturing is definitely what Chinese factories and Chinese companies are doing right now. And the only way to do that is through AI and through the machines rather than human eye. So this is definitely another key beneficiary of that trend.